The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Today, on the 28th of November, I'm speaking to Peter Schiff, who is CEO and Chief Global Strategist of Euro-Pacific Capital and CEO of Euro-Pacific Precious Metals. He's also the author of several financial books, including Crash Proof 2.0, How an Economy Grows and Why It Crashes, and his latest, The Real Crash. Hello, Peter.
Hi, how are you?
Good. After President Obama's election, the almost inevitable seems to have happened. US politicians seem to be fudging their way towards putting off their fiscal cliff at the end of the year and once again kicking the can down the road again. What are the consequences of this, particularly for savers of precious metals?
Well, for people that own precious metals, it means much higher metals prices, certainly in terms of US dollars. But because the dollar is still the world's reserve currency, we export our inflationary policies all around the world. So if the dollar is weak, if we're running huge deficits and the Fed is inflating to finance them, that means that central banks all around the world are going to follow in our misguided footsteps. And so it means that central bankers, particularly in some of the Asian economies, where they're trying to peg their currencies to the dollar so that they can keep exporting products to American customers who really can't afford to buy them, it means global inflation. So it means that people need to own precious metals, regardless of where they live or what currency they generally transact or save in. It means that currencies will be debased and that gold will continue to be, accumulated by people who understand this. And eventually the prices are going to go a lot higher.
If there is global inflation, which of the major economic trading zones do you think will kind of crash first? Will it be Japan or Europe, or will it be the United States itself?
Well, I think of those three major economies, I think the U.S. is clearly in the worst shape, although most people don't believe that. And so the United States kind of perversely benefits from the problems that people do correctly perceive exist in Europe or Japan. For some reason, people seem oblivious to the same problems in America. But as people worry about Japan or China, for that matter, too, Europe, they look for a safe haven. Now, gold is a real safe haven, but most money is chasing U.S. dollars and U.S. Treasuries as an alternative safe haven. In fact, when they talk about the risk-free asset, they talk about dollars and, flight to safety. The risk-off trade means you buy dollars or you buy Treasuries. But from my perspective, the real risk-off trade is into gold because there's a lot more risk, I believe, in dollars or U.S. Treasuries than there is in gold. There's a little bit more volatility right now in gold, but I think if you look at a chart of gold over the last decade, that volatility really disappears, and all you see is a pretty steady appreciation.
So, do you think people should short the U.S. Treasury market then?
Well, you could. It's been a losing trade for 30 years if you buy it and hold it or sell it and hold it. But there certainly are tradable movements. There are declines that people can trade, but eventually all bubbles burst. And there's no question that the Treasury market is a classic bubble. The prices make no sense fundamentally. The U.S. government is able to borrow at much lower rates today than it could 5, 10, 20, 30 years ago, despite the fact that it is less creditworthy today than it was back then. We have much more debt in absolute terms, certainly, but also as a percentage of our economy. And we're less likely to be able to pay the debt back without printing money. We should be paying much higher interest rates, but we're not. So it's a classic bubble where the price is totally divorced from reality. It's a mania. It's people are buying because they expect a greater fool to pay an even higher price. And eventually it's going to burst. And when it does burst, it's going to have much greater impact on the global economy, in particular on the U.S. economy and the average American, than did the bursting of the real estate bubble or the internet stock bubble. This one is much larger in scope, and it affects the economy in a more profound way.
Aside from US Treasuries, shorting US Treasuries then, what do you think small private investors should be investing in?
Well, they should be buying gold and silver, as we discussed. I also think they should be investing in global equities. I think if you look around the world, you'll see good valuations. particularly if you look at Southeast Asia. These are countries that are pegged to the dollar, their currencies. And I believe that once the dollar finally collapses and these governments basically abandon this foolish effort to prop the dollar up and stop trying to preserve an export market that really is not viable because Americans don't have a way of paying for what they import with legitimate production to export, I think you're going to see an economic boom in the other parts of the world as currencies rise and purchasing power goes up and living standards rise. So I think you want to be part of that. In the meantime, there's a lot of good dividend yields. People are struggling for yield in a world where sovereign debt pays practically nothing. There are very good yields that you can get in currencies that I don't think will be nearly as weak as the dollar or even the euro or the yen. So there are other currencies that you can own and get attractive yields. You can get 6, 7, 8, 9% dividend yield. And of course, if the stocks that we're buying appreciate, well, that's the icing on the cake. But in the meantime, you get a good income and you get an income in a currency that's likely to gain in value relative to other fiat currencies. The currencies might not gain relative to gold, but I think they certainly will gain relative to other currencies.
What about gold stocks? Because gold's about 80% higher in its dollar price than in 2008, but gold stocks are only about 10% higher. Does this make gold stocks a really good investment at the moment?
Well, I think so. And although I've thought that way for several years and the divergence continues, in fact, even recently, we've seen gold hold up really well, the gold price. Yet gold stocks have dropped sharply. In fact, gold stocks have been even weaker than the overall stock market on this correction. And I think the biggest problem for the gold companies has been that inflation has driven the cost of mining through the roof. Yet the perception among most investors is that there is no inflation. So gold stocks have been a victim of inflation. You would think that they would benefit from inflation as people would buy gold as a hedge. But since the governments around the world have been so successful at convincing investors that there is no inflation, you're not having as much demand for gold as you would. And so the gold companies, because of inflation, the cost of mining has gone way up, but they haven't been able to recoup that in the price of gold, that they're mining. And in fact, many companies are earning less. Many gold companies are actually earning less money today than they were 5 and 10 years ago, despite the higher gold price, because of the increase in the cost of producing that gold. And so right now, I think gold hasn't even really risen. It simply has gone up to reflect the increased cost of producing it. And in some cases, it hasn't even gone up enough to do that. But I think at some point, you are going to see a spectacular increase in the price of gold that will far outpace the increase in the cost of mining it. And that's when you're going to see a huge move in these gold stocks. And until that happens, though, I would expect the underperformance of the gold stocks to continue. That doesn't mean I'm saying don't buy them. I think they should be bought. You've just got to be patient and understand that you might not be rewarded right away, but I think you will be rewarded ultimately.
James Turk here at GoldMoney is convinced that one of the reasons governments have been able to suppress this belief in inflation is they've been manipulating the gold price. And in a recent commentary piece by John Brown at Euro Pacific, he's wondered about the financial negligence of central banks moving gold around between each other. How much gold do you think is really in Fort Knox? And are they coming to the end where they might actually run out of gold in Fort Knox?
Well, I don't know the answer to that question. I know some other governments, I think I recently read something about Germany, wondering whether or not the gold is there or wanting proof. And I know that more central banks, I forget which country in South America, had requested that the gold that they had on deposit at the Fed be returned. So I think there will be some worries, counterparty risks, that maybe the gold is not actually there. I don't know. I mean, I don't know how the U.S. government would have been able to sell all that gold without there being records of it, without enough people knowing about it. It seems to me that the conspiracy theories that that this was all done, I don't see how you can keep that kind of a secret where that many people would have to be quiet about it. So I would tend to think that the gold is still there, but even if it's there, I mean, it's not sufficient, to redeem all the Treasury obligations at the current exchange rate for gold. So I mean, gold prices would have to move a lot higher if the U.S. Treasury was forced to rely on its gold. And remember, too, the U.S. has very little in the way of foreign reserves. We have hardly any, euros or Japanese yen or Swiss francs. pretty much the entirety of our reserves are gold. And so that's all we really have. If there's a run on the dollar, the only way the Treasury can really defend the dollar would be to sell gold to buy dollars. And, that might be dangerous. It might, get rid of all of its gold very quickly if that were to happen.
Is there a magic number then for the gold price to hit before you think it's going to suddenly ramp up and accelerate?
No, I don't know. I don't know what, I think we do need to make new highs though, which we haven't done. I think the high was around 1900, 1950. So I would think if we clear that and maybe clear through 2000, that will probably bring some new buying into the market. It will probably be a major, news event in the financial world anyway. Probably not, for the man on the street, but I think a lot of people will notice $2,000 gold. And then I think people will talk about gold making a high adjusted for the CPI, which I think is probably somewhere north of 2,500. So I think that would be the next target. But yeah, I also think that if that's happening in the context of a weakening dollar, rising commodity prices, maybe a relatively weak stock market, that would be even better. And of course, if it happens with the bond market going down, well, then that would attract even more money into gold. If gold can show that it is the asset that can rise and decouple, that gold can go up when stocks go down, that gold can go up when bonds go down, and people see it and perceive it more as a safe haven, it reclaims that role that it's lost temporarily. And then more people around the world, really want it as money. That's what, you guys, the whole concept behind GoldMoney. You mentioned my companies in the interview. My newest company is Euro Pacific Bank, which is an offshore bank in St. Vincent's, and we're gaining customers rapidly now. The bank is doing pretty well, and it's a full service offshore bank. We offer investment, services, asset management, proprietary mutual funds, full service and discount online brokerage, access to all the global markets. We have bank accounts. But what's unique about what we're doing is, in addition to denominating your bank account in any one of a number of foreign currencies, you can also denominate your bank account in either gold or silver.
So how's your Euro-Pacific precious metals business going of selling actual physical gold coins and things to people?
Yeah, well, we sell physical gold coins too at the Europac Bank. In fact, if you have the gold debit card, you can always take physical delivery of your gold. So we sell it there too. But Europac Metals, the business is okay. It's not gangbusters. We were actually doing better, I think, a year ago than we are now. Business is off some, and it shouldn't be. It should be robust. The fact that people aren't just, the phones aren't ringing off the hooks over there is a good contrarian sign that prices are going a lot higher. Considering the precarious situation that we're in and how it's going to be resolved with a bunch of money printing, you would think more Americans would be, buying gold, but they're not. It's still not a mainstream thing to do. There's still a small universe of gold buyers. I think most of the people who are buying gold today are the same people who were buying it 5-10 years ago. I don't think, we've significantly expanded the market because I still don't think the public has figured out what's going on. And, the amazing thing is here we are talking about this so-called fiscal cliff, and the government has convinced everybody, that the media has convinced everybody that what we have to fear is that the budget deficits will actually get smaller, and that what we need to do is make sure that the budget deficit isn't reduced, that we have to maintain the $1 trillion deficits. And if we don't maintain these big deficits, we're going over a cliff. It's ridiculous. The cliff is coming not because we have the deficit, we don't have the deficits, but because they perpetuate. The real problem is that we don't go over this cliff, right? Because that means we go over a much bigger cliff eventually, because not going over the cliff means we keep on spending $1 trillion more than we collect in taxes every year. In fact, it's going to be more than that. And nobody is talking about what happens when interest rates go up. How is the U.S. government going to possibly pay the interest on the national debt when it has to pay a realistic rate of interest? The answer is it can't do it, which means the Federal Reserve has to keep interest rates at zero in perpetuity to enable the U.S. government to service the debt. And how does the Fed keep interest rates at zero forever? It has to print money indefinitely. That's QE infinity. And, the dollar can't survive that. It's just not possible.
So you think the dollar's going to go into hyperinflation then?
Well, I think the dollar is going to lose a tremendous percentage of its value. Whether or not it loses practically all of its value, which would be the case with hyperinflation. It depends on how the government, the Fed, react to a monetary crisis that's coming, because it is possible to prevent hyperinflation, but it's going to be very painful to do it. Of course, it's more painful to endure it, but the politicians are always willing to trade long-term pain for some lesser short-term pain, and so there will be that that tipping point where we still have the ability to avoid hyperinflation. But if we keep doing exactly what we're doing now, well, then we will have hyperinflation, because we are on that path. But it is not irreversible. But the longer we wait to change course, the harder it's going to be to do it, and then maybe the less likely it will be that we do the right thing. Because ultimately, if we're not going to have hyperinflation, we're going to have collapse of the bond market. The Treasury is going to default on its obligations. The government is going to have to default on its commitments to make Social Security payments, Medicare payments. Banks are going to fail. It's going to be a huge catastrophe. I mean, and not only are banks going to fail, but depositors are going to lose money. The money is not going to be there, and the Fed doesn't. The FDIC doesn't have the money to bail out the failed banks. So people are going to lose a lot of money. So either people are going to lose their money, or the money is going to lose its value. I mean, or some combination. Which is one of the interesting things about my offshore bank, and this might become more in vogue as people get worried about counterparty, is we're a 100% reserve bank. All of my bank's customers can get all of their deposits anytime they want, and the bank isn't in trouble. If 100% of my customers came to me on the same day and said, we want to close out our accounts, we want all of our money, it's there. You can't do that. Banks around the world, they maintain a tiny percentage of their deposits as reserves. And so runs on banks could happen, especially in a situation where the Fed is not there as the lender of last resort. Because if the Fed is shutting off the monetary spigots and jacking up interest rates to prevent the dollar from collapsing, then it can't bail out any failed banks. It has to let the banks fail. Because in order to bail them out, it would have to reverse policy and print more money and ease. But it can't do that. It can only bail out banks if it's easing. It can't do it when it's tightening. And it can't bail out the Treasury either. It can't buy U.S. Treasuries when it's selling U.S. Treasuries. So what happens when the Treasury has to compete with the Fed, when both the Treasury and the Fed are going to the market trying to sell Treasury bonds?
Yeah, we live in a very, very strange Keynesian world. Now, in my favourite book of yours, which is How an Economy Grows and Why It Crashes, you have people who look a lot like the Chinese coming into the island to buy everything up. You've long been a China bull. Are you still a China bull?
Yeah, I am. And you've got to have a long-term time horizon. You've got to see the big picture. And right now, there's a lot of negative sentiment around China. Look at the Chinese stock market making multi-year lows. I think now you're talking around the 2009 lows, whereas other markets are 60, 70, 80% or more above those levels. So I think you've got a real compelling story about China. I think China does have problems. They're not a free market paradise by any stretch, but they're closer to it than we are. That's how screwed up America is. But I think the pendulum is swinging in the right direction over there, and they're going to continue to have reforms in favor of free markets and more freedom and less government control. And I think the biggest thing that they need to do is change their currency policy. It will happen. Eventually, they will do it. They will depeg the RMB and the Hong Kong dollar from the U.S. dollar, and they will no longer have to create as much inflation, and that will help restore or rebalance the economy in a much more healthier way, so that the Chinese citizens will begin to enjoy their production and their purchasing power to a much greater extent than they do today. Even though living standards are rising in China, they would be rising much more rapidly, and it would be much more widespread if they weren't diverting so much of their production and purchasing power to the United States. I mean, you look at pictures here of Americans on Black Friday, showing up at stores, leaving with shopping carts full of stuff. All that stuff, a lot of that stuff was made in China. And why aren't those products on the shelves in China? Why aren't the Chinese workers who produce those products, why aren't they enjoying those products? Why are the Americans who didn't produce anything, getting to have those products? And that's a function of this misguided monetary policy. if the Chinese monetary authorities changed and let their currency go up, America's shelves would be empty, and the shelves in China would be full of products that the Chinese citizens would be able to enjoy. And that day is coming. And I think it's going to be a huge boom, not only for the Chinese economy and for the average person living there, but for people who have invested there. I think there's going to be a lot of returns for people with the foresight to understand how this game is going to end and who play for that end game.
That could mark the end of the dollar, couldn't it, when the Chinese start consuming their own production? Now, speaking of books, your latest book is The Real Crash. How are the sales for that going, and what's the reception to it?
Well, I mean, the sales are all right. I mean, I'd like them to be better. The book did make it onto the New York Times bestseller list the first week it was out. I think it got to number 9 or so, but, then kind of drifted back. I mean, the problem is the mainstream media ignores all of my books. I never really got a review, although I finally got a decent review in Barron's, but it came out, months after the book came out. So that's the only place I've ever read a review of my book was in Barron's. But by the time they reviewed the book, I mean, it's not really on the shelves anymore. I mean, every time I'm at a bookstore, I'm at an airport, my book's not there. I mean, I see all sorts of books there that aren't selling nearly as well as mine on Amazon, yet there they are on the shelves, and my book is nowhere to be found, or none of my books. So I have a hard time getting the conventional media to focus on my book, getting the bookstores to stock the book. It sells pretty well on the internet because people want to, search out the information. So, my books do pretty well on Amazon, but, not as well in the bookstores because I don't get the distribution, and I can't get, reviews. I can't get, even though the books I think are good, I think people don't want to believe them. So they'd rather ignore them.
I often get the feeling that if I travel to the South Pole, I would find 7 Habits for Highly Effective People. One other way people can get hold of you is by listening to your radio show. Before we wrap up today, can you just tell our listeners about how to listen to you on your radio show?
Sure. You can listen anywhere in the world at schiffradio.com. I do the show 5 days a week, Monday through Friday, 10 a.m. Eastern time to noon. That's the live show. And if you go to schiffradio.com, you can listen live. But if you can't listen live, you can go to schiffradio.com anytime you want. And the most recent show, we constantly loop it. So you can listen to it during a 24-hour period. It's free. If you want more flexibility, if you want to listen to it commercial free and you want to start it and stop it whenever you want, and if you want to go back and listen to the archives, last week's show, last year's show, any shows that you want, you can become a premium member. It's only about $5 a month, I think, and then you have full access to all the archives.
I still remember the heady days of Wall Street Unspun. Thank you very much for your time today.
My pleasure. Thanks for having me on.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.